It's my mission and goal not just to analyze the markets for you, but for you to have an understanding of the whys behind it. So I'll ask you to give me a why if you get it, and an N if you don't, and I'll be happy to go over the analysis again. So this week I have some significant turning points developing. Last week I talked about that I thought there'd be a push up to above 100 in the Dixie, and right now that seems to be in gear. I believe that we could complete it by midweek, late week, no later. I have numbers up around par 33, par 55, so that's another 100 points to the upside, which implies another low in the euro. I'm thinking we trade down to perhaps a 105.80, 106.10 level in euro before we get a recovery in the euro. Also last week I talked about that the euro pound had an inside week, and this week was going to be the week I was going to anticipate a reversal week to the upside. So we've satisfied that. Euro pound did take out last week's lows by 20. Would not surprise me if I'm correct about further dollar strength into the middle of the week. That euro pound does test a big round number, perhaps even take it out at 0.70. It's a big round number, maybe 69.90, but still looking for a right shoulder on the weekly that I'll show you when we get to the individual instruments. Also US dollar yen, two possible scenarios, and still think, as I forecasted last week, that we needed one more high above that 24.30 level, 23.30 or so, 23.50, up towards the 23.80, 24 level in the coming days. That too should manifest should the continuation in the dollar happen. Last week I talked about the correction in the S&P is getting underway. It'll happen even a little faster than I thought it would. Accelerated pretty good into the terrorist attacks in Paris this weekend. I talked about down here a rally towards 2050 and then readjusted up towards 21. Said that at least we've have a pullback, if not eventually wash out under these lows. So looking for the S&Ps to recover into midweek, into the 18th or so, possibly as high as 2060, 2070. I'd be surprised to see a new high, and this should coincide with the dollar's last hurrah here. Yes, can you see my screen? Can you see my screen? Can you see my screen? Let me try it again. How about now? Can you see the dollar index up there now, Emmett? I'm showing the, okay. Thank you very much for letting me know. This is the S&P. So I'll start over. No problem. So I started off talking about the Dixie. I'll do it again. You'll be hearing what I said for a second time, but you'll see the chart. Thank you very much. So last week I was talking about the potential of another new high in the dollar this week, and that looks in gear. I'm looking for pushes up towards above the 100 level. Everyone that's seeing the Dixie chart now, I'm looking for 100. That could be drive 1, drive 2, and drive 3 up here. A couple of numbers are par 33 to par 55, so there's another 100 or so points to the upside before I think there could be a reaction in the market. Should that scenario play out, I'm expecting the low 106 to 105.85 level in Euro USD. So there really wasn't much of a reaction to the terrorist attacks in Paris. Gold popped 10, gave most of it back. I'm still looking for one more low in gold towards 1050. Want to see what the miners do with that, but for now looking for into Wednesday, a new high in the dollar index, and then a potential top to take place. Give me a Y if you're with me on the Dixie, looking for a continuation move above par. And this is also predicated on the fact that we began a correction in the S&Ps that was accurately forecasted up here at the 21 level. We had a very big decline, didn't quite retrace 50% of this recovery during the October timeframe from the end of September. And with the dollar rallying, I'm expecting a recovery in the S&P, so risk on could be there with the dollar going up, maybe back to 2060, 2070. I'd be surprised to see new highs in the S&Ps. In fact, it's a bit of a tell in the S&Ps if the dollar makes new highs without the stock market doing it, because the stock market actually led the dollar higher. Now the dollar's going higher with the S&Ps looking vulnerable for, at least this was the first wave down, or A, with a B for a failing rally, and then another decline to the downside. Give me a Y if you're with me on my outlook and view of stock indexes, which is really the linchpin besides the dollar for risk on, risk off in this environment. So accurately called this pullback, now looking for some type of failing rally to coincide with a high in the dollar index. Give me a Y if you're with me. So if you're new to my webinars, if you're a client of RoboForex, they're all recorded. They're all there for you to be able to see. I do correlate the S&Ps. I do correlate the Canadian, the crude oil market. And I was talking about that I thought Canada could make a move up towards 33.80. So that forecast is being manifested too. Here's your look in the crude oil. Peace contract looks like we're headed for new lows here. Still think that Canada does not have a huge amount of upside here. The whole world is bearish crude. And I think that there could be some type of turn after we clean out the stops here. And with the high in the dollar coming, I'm also looking for some type of reactionary low in crude oil, which is going to equate with a top in USD CAD. We're starting to get some divergences. We didn't have any in the last week or so, and I was looking for higher levels in Canada with crude selling off, and now they're manifesting. So potential turning points in USD CAD after this washout in in the crude oil is complete, which we're really not that far away from picking out stops on the deferred contracts. If you look at the nearby, though, we're not making new lows. Let's look at daily nearest, which is a little different look. And as you can see, we're on the verge of making new lows in the December contract, but still $2.50 above the recent low, so perhaps right around this 39 level. Another dollar lower, we turn, and I'm also looking for a turn in Canada. Also, a bounce in the oil shares will help the S&Ps in their counter trend rally. So when I get to Canada, you'll see some of the momentum is beginning to wane, and we could be close to setting some type of high in USD CAD. Gold got a decent pop on this. It was up about $10. It's given up more than 50% of today's gains. I'm still looking for one more washout in the gold market. Looking for about 1050. Could be there when the dollar peaks. Again, the weekly chart. Looking for a third drive. Here's your weekly in the gold. And I correlate the gold closely with the Aussie. So I can't give an all clear on buying the Aussie until I think the gold has turned, but we're starting to have some divergences, and here's drive 1, drive 2, and we're setting up the third here. Looks like 1050 is a viable target. Some of the extreme targets are down around 1020. So I'm going to stand aside in bottom picking the Aussie until I get this cleansing decline in gold. Give me a Y if you're with me, and you understand that I correlate the Aussie closely with the gold and the Canadian closely with the energy. Thank you. Okay, so one of the last markets I cover are the treasuries, and it looks like a foregone conclusion, at least that's the way the market's looking at it, that the Fed's going to move in December. So I use the ETF TLTs, which are 20-year treasuries, and I equate this pretty closely with US dollar yen. When treasury prices are increasing and yields are falling, US dollar yen goes down, and when yields are going up, that means prices down, yields up, US dollar yen goes up. Okay, so this is a risk on, risk off move. Really, TLT is almost looking like there could be some type of ABC pattern here. The whole world's negative bonds. I think there is going to be a big break in bonds, but to me, I'm looking for a potential top in US dollar yen, so maybe we get one more sell-off. The equality would be about 116, and I still think the yen's going to make one more new high. I'll show that potential divergence as well. So with risk on in the S&Ps, and the S&Ps maybe being able to rally 61.8 back, perhaps the bonds sell off a bit more and we get a better shorting opportunity in US dollar yen. Give me a Y if you're with me on all my correlations, treasuries and S&Ps with US dollar yen, Canadian as a petrocurrency, Aussie as a proxy for the gold market, and the Dixie being the basket of the dollar index. You have to follow the Dixie. It would be like trading, say, Apple without following the Dow or the NASDAQ. So you have to follow the Dow, follow the NASDAQ, the basket, and then what we do is dissect the relative strength, relative weakness for our preferred longs and shorts. So if you're clear with everything, can you hear me now? Can you hear me? Yes, can you hear me? Okay. I don't know where the internet issue is coming from, but we'll go right to the instruments after this. Yeah, it was some type of internet issue. Anyway, I got through all the outside markets, right? So you guys you're with me on all the outside markets. Let's get to the currencies now, okay? So tell me if you see Euro USD now. You see the Euro USD chart? Okay. So last week I said I still thought we would take out these lows. I'm still in that camp that we're going to take out the 670 lows. Want to show you where I think the euro could go to if I'm right about the dollar rallying to above 100 plus 30, 133, 155 should take the euro down towards the 106, 105.80 level sometime this week. And if you notice, we've already had one divergence here. See this? This was the strong NFP jobs number. We had a confirmed low. Then we moved sideways. We had a low, but a higher price, higher momentum reading. But my ideal momentum readings are over 30. So this was 24. And I'd like to see one more washout to this level and the RSI stay above the 30 level. And that would be a 1, 2, 3 drive to a top level. So if you listened to me last week, you strength into later in this week to get short, looking for one more drive. It's still my preferred scenario that we head down towards the 106, 105.80 level. Only thing that would change that would be closes back over 108. Give me a Y if you're with me on Euro USD. And after that, I think it could be a pretty surprising rally. Okay, because if the S&Ps, we're also going to have a little daily divergence down here. Because if I'm right about the S&Ps and after this rally they turn, why can't we have a rally back to the breakdown, which comes in around 111? Or at least back towards some moving averages above the market. Here again, 110. And here again, the 108 level. So that's my view on Euro. That as I think there's going to be a dollar selling opportunity, I also believe that there's going to be a Euro buying opportunity. Give me a Y if you're with me. That's my preferred scenario. Maybe we'll be there by Wednesday at my next webinar. The pound isn't as clear to me. In fact, the pound looks like there could be a short setting up here. So this is something I teach a lot. It's called the 3 drive to a top formation. So here's the pound. And actually the pound, most people are going to be more constructive to buy the pound because the euro will be making a new low and the pound will be making a higher low, maybe down here around 151-ish. But before that happens, I could see a rally back to 52.80, 52.60. Here's drive 1, which was already a divergence. Here's drive 2, which diverged. And if we get a rally back towards 52.80, I want to see the RSI stay under 70 for a potential short. And the reason that I think it's possible for the euro to be a buy on weakness and pound to be a sell on strength is because of something I've been talking about in the euro pound that I talked about last week. We were negative. I was negative. The euro pound up here said that we'd pull back at least to the 71 level, which we did, because I'm looking for the potential of a head and shoulders bottom on the weekly. Here's your left shoulder. Here's your head. Symmetry would be at about 70.11. Okay. We already have some divergence here at 70. Today's lows, 70.22. So we took out last week's lows. Here's the potential third drive formation. That's going to take it down to 70.10 to 69.90. Now this is what I'm anticipating. Should we head down, this is an inside week. This was the first bounce that I told people start covering your shorts, and we caught the pop here. But then last week I said I didn't like the action because there was no upside follow through. And I think the euro pound's a very important pair to get correct directionally, because the euro pound gives you your preferred longs and shorts in euro USD and pound dollar. When euro pound is heading down, your preferred short is euro on strength, and when you want to play dollar weakness, your preferred buy is the pound on weakness. When euro is heading up, your preferred long is the euro on dips, and your preferred short is the pound on strength. So it's my belief, here we are, that we're taking out this week's low. We could head down to 70, 69.90, and the signal I'm looking for is that by the end of the week, we're trading either get a reversal week, at the minimum closing back above 70.69, but the best signal would be to take out the high of last week after taking out this week's low, Then later in the week, take out this week's high of 71.5 and have a bullish engulfing line. So I'm anticipating it and recommending being long should we sell off down towards the 70 level in the next couple of days, 70.10 to 69.90, risking 100 pips, looking for a turn in euro pound. So the euro pound turn, this would just be the beginning, because this would be the right shoulder, and we have to take it a step at a time, and there'll be resistance back here at 73, but eventually I'm anticipating a breakout over 74 that could give us a 78. But we take it a day at a time, a week at a time, and right here I'm looking at the potential of a head and shoulders bottom with the right shoulder developing here. And I'm not always talking about buying euro pound because I was bearish talking about 71 in the upper 74s. Give me a Y if you see the potential of a right shoulder developing in euro pound. And the implications for that is usually negative the dollar and means that the euro will outperform the pound on rallies or hold up better during declines, which would be the inverse of what's been happening here the last 5-6 weeks. So even if you don't trade euro pound, and I do, sometimes it's a lower beta bet than when you're trying to top pick or bottom pick the euro. But it's important to get direction right, because if you didn't get, if you weren't bearish euro pound and you sold the pound instead of the euro, you didn't make much money. You're break even or down, but you made money being short euro. Same down here. If you were long the pound instead of the euro, you didn't make much money when this turned because the euro outperformed. So give me a Y if you see the significance, if you're a a cable trader or a euro trader, to understand the direction of euro pound for your trade selection. Okay, great. So now let's move on to the yen. And last week I talked about that we have a confirmed high in the yen, and I can't get bearish until we take out this high in the yen. Of course, we're back underneath this wedge line, but I'd still like to see one more high in the yen. Here's your 4-hour. We're not that far away. I was 23.60. I'd be looking for maybe 24, 23.80, 4.30, and the RSI staying under the 70 level for a potential shorting opportunity in the yen. So we either fail here at 3.30, but my preferred count, and we're having a pretty good day here, is for us to take out these highs here. Here's your weekly, where we could also be developing some type of left shoulder here in the yen. So this is going to be, we have to turn the tide around the 24.30 level. Otherwise, if the dollar's just entering a super bull phase, then the yen is going to 129.30. But I'm a speculator, and I'm thinking that when the S&Ps roll over again and the dollar rolls over again, that there's a potential shorting opportunity in US dollar yen from new highs. And it's not just making new highs. We need to see at least a 4-hour diverge. We're only about 50 pips away. Perhaps we get something like this. Sometimes you break a channel and you come back and test it. Here you go. Here's 23.90. Pay attention to 23.80 to 4.20 for at least getting out of your US dollar yen longs and for potential reversals sometime midweek. With the S&Ps and dollar, follow my roadmap. Give me a Y if you're with me. Okay, now I brought up Canada. So here you go on the Canadian, another classic example of a 3 drive to a top formation. So we're going to be looking for some type of turn in crude too. So it got through this wedge line a little bit, and now we're back underneath it, and we diverge. Just a pretty classic 3 drive to a top formation in the Canada. I wouldn't rule out, you know, one more push up towards this 34 level, but to me it's getting late. We have all kinds of momentum divergences here, and the whole world is bearish. The crude oil market looking for new lows and looking for a crash, and I'd be looking for shorts up around 380 to 440 in USD CAD. Perhaps what you do is you gauge it against a dollar index, making new highs up over 150. So looking for a potential topping pattern to develop in USD CAD that will still be a lower high. I'm not expecting these highs, 34.50, to be taken out. If so, it's going to be some type of double top. But believe we're starting to run out of juice here. And I'm not looking for a crude collapse, but possibly a crude turn. So shorting opportunities setting up in USD CAD. Give me a Y if you're with me on USD CAD. Potential reaction low in crude oil, potential top in USD CAD, potential top in USD yen, potential low in Euro USD, potential low in Euro pound. So you would think I'd be, when do I think that, I think midweek is my best guess. Midweek is my, are you asking about Canada in particular? Yeah. I'm thinking midweek. I would gauge it against the dollar index and also monitor the crude. I'm thinking Wednesday. If you want to pin me down to a day, I'm thinking midweek. Wednesday through Friday. Price-wise, 380 to 440. You're very welcome. So you would think with the top, looking for a top in Canada, should be looking for some kind of low here in Aussie. And it's possible if the gold has bottomed, Aussie has, but I'd still be looking for one more decline in Aussie. Although it's beginning to hold up pretty good. 70.50, if you want to try a long scalp in Aussie, probably around the 70.60 level, risking the lows, because if we take out the lows, we're going to probably trade 69, 68. Okay. So 70.60, 70.40 with stops under the low, the move if you want to try that. Okay. A couple of other currencies that I talked about that worked was the EuroCAD. Had a pretty nice lift off in EuroCAD last week. Still think we're going to hold the lows and there's more upside left in EuroCAD. I'd be looking to buy breaks. Even if Euro makes a new low, I don't think that EuroCAD will. Euro Aussie could be setting up something as well. We're beginning to get some divergences. I'd be interested down here around the 49, 48 and a half at probing the long side of Euro Aussie as well. Any questions on anything I've covered today? Or perhaps is there a pair you'd like me to look at the Swiss? Swiss basically the inverse. I'm thinking that we're completing up here in the Swiss. Maybe up around 101 and a half. See these divergences here? So you have a 3 drive to a bottom formation in the euro, and you could potentially get a 3 drive to a top formation in the Swiss, maybe 101.5, 102. Does that help? But I wouldn't be long, especially if the RSI stays under 7 after maybe another 100 pip pop. And the 4-hour, I believe, is going to stay under 70, up around 101.50, 102. Anything else? I don't follow that one. Oh yeah, I covered Aussie and CAD. I covered them. I gave you areas in the Canadian and the Aussie. You're very welcome. Thank you for your attention, everyone. Good luck. I'll be back with you on Wednesday, and we'll see how these forecasts are evolving. Remember, don't just count your pips, count your blessings when you see what's happening in Paris, and appreciate your freedom. And I'll see you on Wednesday.